Good day traders, this is Stefanos on behalf of Tixee, and in today's webinar we'll be giving a look back of the market for the week of the 26th until the 30th of September, which also happens to be the last week for this month and this quarter as well. Now looking at some of the highlights for the course of the past week, shares of Apple tumbled throughout the week after a rare downgrade by Bank of America, and meanwhile the Great British Pound reached all-time record lows before recovering to end the week in the green. But first, as a disclaimer, please note that all of the ideas discussed in the webinar are my own opinions and do not make up for any form of investment, trading advice, neither any recommendations to buy or sell. You should always do your own research and due diligence before buying or selling any securities, financial products or instruments, and whether you use any kind of trading strategies. Any information that relates to past performance is not indicative of future results. So, kicking things off with stocks and looking at Apple. As we mentioned during the intro, this is something pretty uncommon to hear about, which is Apple being downgraded. And on this occasion, it was downgraded by Bank of America. Now, Bank of America lowered the rating from buy to neutral. And they didn't only keep it at that, they also lowered their price target from 185 to 160. Now, if we look at the chart, which we are currently looking, and it's on the weekly time frame, we can see that we're well below from the price target set by Bank of America. We're currently trading around the $138, whereas if you remember, we said the target was lowered, but it was lowered down to 160, which is all the way up here. So that doesn't go to say that prices are going to start recovering, bounce back and go reach those targets, but it's just Bank of America saying that it still has room for upside, but this upside has now been lowered by $20 down. But of course we can't know for sure when this is also going to happen. Looking at the chart purely out of a technical analysis standpoint, we can see we're nearing some lows down here, which is going to be essentially 3-month lows. So it would be interesting to see how price reacts once we reach those levels, which could be quite soon, seeing as how quickly the prices are moving lower and lower. Now, the reason for the downgrade cited by Bank of America was the fact that they anticipate weaker consumer demand over the next year due to the macroeconomic challenges. Now, like we said during the intro as well, this also marks the end of this quarter. And obviously it wasn't just Apple who was affected by the overall economic conditions. I mean, we have seen essentially that this has been the third consecutive quarterly loss, which made this the longest losing streak for the S&P and the Nasdaq since the Great Recession, and it is also the Dow's longest in 7 years. Now, the reason for the overall movement of the markets lower has been, of course, the fact that we have been having recession fears coupled with fears of the conflict between Russia and Ukraine escalating to a global conflict, which is something that has rocked the markets in the worst ways possible. We've seen central banks across the world hiking rates quite aggressively in a bid to tame inflation as well. And while this hasn't really happened, I mean, we have seen them hiking rates, but inflation is still sitting at record highs in double digits in some countries as well, just like Germany, who reached double-digit inflation figures. I think it was for the first time, actually, as well. So you can see that despite the measures being employed, inflation across the globe is still sitting at record high levels. And as we can see from the chart of Apple, if I just zoom out just to have a look from the start of the year, we have, of course, moved significantly lower. And it wasn't just that. If I go over and look at Microsoft, which is also in the same sector, we'll see pretty much the same story. If we want to look at a different one, so if we want to look at, let's say, Boeing, let's just see here, pull up the chart, you can pretty much see the same story as well. If we want to look in the semiconductor sector, like Nvidia, for example, we can pretty much see again the same story, and you can also see just by the chart, without even me saying anything, you can pretty much tell that prices have been down by quite a bit. So yeah, with the start of next week, we kick off with a fresh quarter in hopes that we could see some of these losses over the past 9 months being recovered. But of course, we'll see what kind of approach central banks will follow in the next couple of months. So yeah, this is with regards to stocks. Now moving on to Forex, which it was just as volatile, and things started quite chaotic, I would say, with the beginning of the week on Monday, and the currency that basically rattled the markets was the pound. Now, the reason for that is, I remember last week the newly elected Prime Minister Liz Truss basically announced a tax cut plan. This announcement, that's what essentially sent markets into a shock because it was quite unexpected. She had also been warned about the consequences that this tax cut plan would have, but still they went ahead with it. And if I mean, we're looking at the pound dollar, and I will just switch on the daily time frame. Of course, now you saw there that it was in the green. We'll explain why later. But you can see with the start of the week, we pretty much just tank lower and go down to record lows as well. If I switch this on the monthly time frame and zoom out as further as possible, you'll see these kind of levels have never been reached before. And if you look on the price scale itself, if I put my crosshair around about here, you can see that it almost even reached parity with the US dollar, which is something that hasn't really happened. The reason that it was able to recover part of this drop and finish the week in the green is because it had a positive GDP report on Friday, which obviously came as a surprise to many because everybody, I think, within the markets more or less, they were fixated over the fact that they went ahead with this tax cut plan and they sent markets into a shock, and there was no way for them to recover. But of course, this GDP report came as a surprise, so investors reacted to the news most probably, and as you can see, it being reflected on the charts, it's finishing the week back in the green. But of course, it doesn't mean it's the start of recovery. Again, this could have been the sort of knee-jerk reaction that we see time to time when we get this kind of unexpected reports or results. So this could have been something like that. But overall, the pound dollar, as you can see from the start of the year, it's also at its lowest levels essentially. So the start of the year was somewhere around here. So just like we saw with the stock markets as well, the pound dollar is also down against the dollar, which obviously has been strengthening and reaching 20-year highs as a result of the aggressive rate hike cycle from the Fed. So yeah, this was more or less the main events or the highlight of the weeks with regards to the Forex market and what most people were talking about. Now, next week, of course, we're going to be having the NFP report, so definitely stay tuned for the outlook as we'll be discussing about that later as well. Lastly, we're going to be looking at oil and gold. Both commodities rose ever so slightly. The reason being is that the US dollar actually recovered a little bit from the highs. So if I switch here and let's pull up the chart of the dollar index. So as you can see, it's on the weekly time frame, and we have recovered from the highs. Initially, it broke last week's high and made new highs, but now it's recovered since, and it's closing in the red, which is basically some people saying it's due to the fact that we have had falling bond yields over the course of the week, which could have been as the reason why the US dollar retraced a little bit from the top. Now, of course, the commodities such as oil and gold benefited from this. So if we look at oil first, we can see that although it's not very much in the green, at least it's not posting its 5th consecutive week in the red, because the previous 4 weeks, all 4 of them were in the red, as we can see here. And things were slightly even better for gold, which probably was fueled also by the increasing tensions from the conflict in between Russia and Ukraine, seeing as how Russia also officially annexed 4 regions within Ukraine, which of course the UN has failed and the EU has failed to and will not obviously recognize. But nevertheless, all of this is just adding fuel to the fire. and the increasing tensions are benefiting commodities such as gold. As you can see, it's pretty green for the week, finishing the week up by 1.18% and bouncing up from this after breaking these lows down here. If we switch on the weekly time frame, which you are on now, we can see from the start of the year, I would say it is quite far from the highs, which is essentially where the year started. But I'd say it's not as bad as the drops in the stock market or some major currency pairs. Nevertheless, we can see the impact across the board and across all of the markets that we've been having over the past couple of months. Now whether we're going to be seeing the end of the tunnel by the end of this year or beginning of next, that still we cannot know for sure. So we'll just take things one step at a time, 1 month at a time, and see how markets progress and unravel as well. And yeah, there you have it. That's as the look back and review for this week. I hope you enjoyed the video and you found it useful, and I'll catch you all in the next one. Until then, trade safe.